Hello everyone, and welcome to the first official Finominal UK YouTube channel video, the first of many. Now in this series, I'm going to walk you through real fund analysis using the Finominal platform, and we're going to kick things off with the Fidelity Global Dividend Fund. Just to note, this isn't sponsored in any way, it's just simply a real analytical exercise using live fund data. So we're going to kick things off in the Fund Explorer. I'm going to filter by AUM, as this is exactly why I've chosen the funds for the first video in this series. As we can see, a very popular fund, 56 billion AUM, and it is also one that I saw being quite popular in my prior paraplanning days. I am using the R Inc. share class as the proxy, but just to note that the underlying holdings are materially the same across the other share classes as well. Now, we do have an array of different tools we can analyze this with. I will be using the fund analyzer initially. In regards to the benchmark, you can choose an array of benchmarks if you wish. However, I am going to go with the fund manager's suggested one on their fact sheet, which is the MSCI World Index. So let's get into it. Looking at it initially, we can see quite a relatively expensive fee, 0.76%, and that's just for this share class. I will note I have seen more expensive fees for the same funds with other share classes, so that's worth noting, I would say. MSCI World, 0.15%. Compound annual growth rate, 9.3% versus 11.6% for its benchmark, so overall underperforming against its benchmark there. Though we have seen lower volatility, 10.2 versus 13.3. This is where it gets quite interesting though. Max drawdown minus 10.14, MSCI World minus 18. So that's almost half the max drawdown we're seeing there. A Sharpe ratio of 0.57%. Outperformance consistency has only been 1 out of the last 5 years. Looking at it from a chart perspective, we can see how that's portrayed here as well. Notice how we see that downtick as well in the MSCI World. So when we saw the sort of trade tariffs with Trump, though we saw the Fidelity Global Dividends not see that decline. And this is illustrating that underperformance against its benchmark, even for the last 3 years, has been quite consistently underperforming against it. We can also check other data such as distributions, monthly returns per month. But I'm going to keep going through. We're going to look at the asset classes now. So as we would expect, 93% in equities, small amounts in cash. And this is a globally diversified fund. We are seeing about 24% in US, though if we compare that to the MSCI World, that would be a much bigger sharing for the US. So we can see it is globally diversified. Looking into sectors, an overweight in financials as well as industrials, and an underweight against its benchmark in information technology. So that's where we're seeing that downside protection is what I would say, and that manager taking a more active approach, so not investing in the sort of Mag 7 stocks and such. Moving forward, we're looking to alpha and factor exposures. So this is quite interesting how we see the ranking versus the MSCI World Index. So overall, the benchmark for the MSCI World will be at 50. So if there's a ranking above that, that's obviously good. We're seeing a green bar. If it's below that, then we're seeing a red bar. So overall, we can see the Fidelity is buying quite cheap companies, as we'd expect for a high dividend yield fund. Low on momentum there, and that's also portrayed with that earlier graph we saw with showing a decrease in weight on information technology. Good ranking for volatility as well, as we saw earlier, with that also max drawdown side of things as well. Also look into return-based factor exposures. So overall, from an equity factor exposure, it's been quite consistent with the low volatility factor, though we have seen that change slightly, as mentioned, when they've taken that bit more of an active stance with recent economic environments, with sort of Trump and such. Looking into risk, I'm going to go into drawdown analysis and stress testing. So again, this is where we're seeing that downside protection quite nicely. If we look at earlier on in the year, minus 11.7% in the MSCI World versus just just under 1% for Fidelity Global Dividend. So that is good to see, of course. Now, we do only have data going back towards the end of 2021, but we can actually replicate those returns based off of the data we have, so we can see how that would perform. So, for example, around just after 2008, we saw again further downside protection from the manager if we did replicate that back. So, nice to see that we are seeing quite a good amount of downside protection there, I would say. Looking into diversification. So as we'd expect, correlation to the FTSE 100.58%, quite a low diversification score, 31, so mainly just equity driven. But this is where it can get quite interesting. So if we just look at the Sharpe ratio of the FTSE 100, we see 0.92. However, if we was to have the FTSE 100 75% and 25% in that Fidelity fund, we would increase diversification and also see an increase in Sharpe ratio. So I think that's worth noting. Looking into return prediction. So just to highlight exactly how this works. So we use the capital market assumptions by very large providers in the market, BlackRock, JP Morgan, Invesco. So we're able to use their assumptions to forecast what these returns would look like on a base, optimistic and pessimistic case scenario. Do note these are, of course, only forecasts. Forecasts can, of course, be wrong. So it's not a guarantee in any way, shape or form. That's not what this is for. It's just so we can forecast that, And then that brings us over to the wealth curve. We can actually put in your portfolio value and see how that could look based off those capital market assumptions over the years to come. I will now look into fee reduction and peers, so how this compares against cheaper peers. So now I'm going to select the top 3 others, and we'll put this in the asset comparer. I am also going to select the MSCI World again as the benchmark, as we saw. And you can select any saved portfolios that you have or the other standard benchmarks that we have. As highlighted, are we doing the MSCI World? Here we are. So let's see how this fund has compared. So overall has been in tracking, I would say, with these other funds. So that the other Fidelity Fund, Global Enhanced Income, and the BNY Mellon Global Equity Income. Though of those ones slightly less, but not as much as that Janus and Henderson fund. Okay. Looking into statistics, we can see much more extensive than its peers. Look at what's in 0.06, 0.8, and 0.05% for that BNY one. Regards to compound annual growth rates, overall, getting slightly less than its peers as well, other than that Janus and Henderson one. BNY showing us 10.12%, also a lesser Sharpe ratio than that other Fidelity funds and that BNY funds. Dividend yield 2.59 versus 4.7 and 2.97. Okay, so overall, I would say, if we look at this BNY fund and compare that against that Fidelity one, we're seeing fees of 0.05% versus 0.76%. We're seeing a higher compound annual growth rate, a slightly less volatility as well, higher Sharpe ratio, as well as a higher dividend yield as well. So that brings me the end of this fund analysis video. I do hope you found it helpful. Please do like, subscribe, and if there are any funds or portfolios you would like me to analyze, please do let me know in the comments. Thanks all, and see you in the next one.